In this video, I'm doing a thorough backtest of a strategy which uses the Aroon Indicator or the Aroon Oscillator. It's not my own strategy, it's one I picked up from a website called Oxford Capital Strategies, and they call this strategy the Aroon Indicator Breakout Strategy. They've already done a lot of detailed testing across a lot of the futures markets, about 40, I think, of the futures markets. However, I'm not going to test any of the futures markets. I'm going to test the major Forex pairs. In fact, I'm actually going to test 14 pairs in total, and I'll be testing 3 different time frames for each of those Forex pairs, which totals 42 separate tests. But also, I'll be testing a portfolio collectively for each time frame. So that's another 3 tests. So a total of 45 tests we're going to look at today. By the way, sorry if my eye is looking a bit distracting. For some reason I woke up this morning and it's really bloodshot. I wanted to get this video filmed today and I didn't want to delay thinking my eye's going to be better tomorrow. So I apologise if that's going to be a distraction. Most of the work we're going to be doing is going to be on the computer screen anyway. All the testing that I'm doing today is going to be using OANDA data from January 2008 through to December 2022. We'll be looking over all the individual tests and then recording the test results in the strategy database, which we're building together here on YouTube. So firstly, let's have a look at this Aroon indicator and the strategy rules. We've got a chart here just of Australian dollar versus US dollar, and it's the daily chart. And I'm just going to demonstrate to you what the trade signals look like. Down below here, this is where we've got our Aroon oscillator or Aroon indicator. And this indicator wasn't actually included in multi-charts. I had to program this indicator. But I think if you're looking on something like TradingView, they do list the Aroon indicator and it works just the same as my one here. So we've got 2 lines. The red line we call the Aroon high or the Aroon up, and the blue line which we call the Aroon down or the Aroon low. And the signals come when we get a crossing of these lines. When the Aroon high or the up crosses above the low or down, we get a buy signal. So we buy on the open of the next bar after the cross, and the opposite, we get a short signal. There is one more condition which doesn't often come into play, but we've got a scale on our oscillator here, and when we see the cross, for example, this crossing here, when the red line or the Aroon up or high crosses above the Aroon down or the low, the high has to be above the 30 level on the oscillator, and most of the time it is. So that's our simple 2 conditions. We're just looking at the crossover of the lines and making sure that the line which has crossed above is above the 30 level. We've got 2 different exits, or actually we've got 3 different exits, because one of the exits is a stop and reverse, like we see here. We exit a long position when we get an entry signal to go short. That's our stop and reverse. We've also got a timed exit. You can see here, this is a timed exit, which we have set at 20 bars. So in this case, it would be 20 days. If we were looking on an hourly chart, it would be 20 hours. And we also have a stop loss. Now, the stop loss value is looking at a value of the average true range over the last 20 bars. And it's 6 times that value. So it's a very large stop loss. This indicator, you can see the 25 here, that's the length of the indicator. And we can adjust that, of course, but we're going to stick with just the 25, which is the baseline for now. We can adjust that 30 threshold, and of course we can adjust the stop loss. If I was to start adjusting anything, I think it would be looking at the timed exit. I'd want to know what happens if we exit after 5 bars, or 10 bars, 20 bars, 40 bars. I think that would be a more valuable adjustment than adjusting the oscillator. But for all the tests that we're going to go through, we're going to keep the settings standard for all of them. To carry out the testing, I'll be using Multicharts' Portfolio Trader. This allows me to test the same strategy across multiple markets or timeframes, or both, all at once. We can then look at the results individually for each individual time frame or market, or collectively as the portfolio. Now, the results that we're going to see in the Portfolio Trader are going to be in pips, rather than most of my tests are normally in the currency like dollars or yen or pound. However, because we've got mixed currencies within this portfolio, I've kind of equalised that, and all the results are just going to be in pips. There's no trading costs added into any of this testing, but we'll be talking through that as we go through the tests. So to start with, let's have a look at the daily time frame. So we're in the portfolio and you can see that the instruments we've got the 14 Forex pairs listed there, and they're all the 1440 minute or daily time frame. The signal is the same signal that we've already seen, the one that I created. That's the strategy. Remember, the results we're going to be seeing are going to be in pips rather than the currency value. So first off, this is the collective performance over those 14 pairs, and we can see it's actually losing money here on the daily chart. That's what the equity curve looks like. So it looks like trading all of those pairs, the same strategy, isn't working very well at all. But let's look at the pairs individually. And we'll just quickly run through these pairs individually. In fact, we'll only look at the positive pairs, looking at the net profit. So the first one, Australian dollar, US dollar, made almost 2,600 pips over that 146 trades. That's what the equity curve looks like. Got an average trade value of 17 pips. So 17 is good because once we've paid some spreads and some commissions, we're still going to be making money with that 17 pip average trade value. The next one, which is profitable, not as much, Euro Yen. We've only got a 7 pip average trade here, so that's going to be a little bit tight by the time we've paid some costs. And the equity curve isn't great, is it? It was doing really well up until end of 2015, but then has just kind of stopped working. Euro New Zealand dollar is a big loser. Euro dollar is making money. Equity curve is not that great, is it? The next one which makes money is pound yen. Equity curve, not that great. What's the average trade value? It's 10 pips. Looks like it was working much better on the short side than it was on the long side. But even the short only equity curve is not very good, is it? New Zealand, Canadian dollar. That's a better looking equity curve. Period here which wasn't very good, but generally it's an uptrending equity curve. Is the average trade value big enough? 25 pips, yes it is. So the time we've paid some costs out of that, it's still going to be a money making strategy on New Zealand dollar, Canadian dollar. And the last positive one is New Zealand dollar, US dollar. A similar but not as good equity curve as the previous one. An average trade value of 12 pips, so that will probably still make money after trading costs, but not an equity curve that I like the look of. Next, we're going to look at 2 more time frames. We're going to be looking at the 4-hour or the 240 minute and the 1 hour or 60 minute. I don't think there's any point in going less than 60 minutes for now, just because the average trade value is going to become too small. Hopefully we'll find something that works pretty well though. But if you are looking for more strategies which do have a proven backtest, then you can download my 22-page Beat the Markets strategy guidebook. In there you'll find the complete rules and the results from backtests of 3 more rule-based strategies. If you want to get that, you can find it in the links down below. But better still, you can get even better strategies, another 6 strategies, in my popular trading course. Amongst all the other course material, you'll find those strategies, and if you're a multi-charts or a TradeStation user, I even give you the code so that you can import the code or copy-paste it into multi-charts or TradeStation and then play around with it yourself. Some of you guys have liked to try and improve what I've already done, which is great, or just take what I've done and go with that. Links for that course are also down below. So let's go and have a look at these last 30 tests on the smaller time frames. Now we're going to have a look at the portfolio on the 240 minute time frame. So looking at the net profit of the overall portfolio, it is positive, just over 12,500 pips. Looks like it's much better on the short side overall. That's what the equity curve looks like, which is not particularly good, is it? Let's look at the individual markets. This time Australian dollar, US dollar isn't profitable. First one which is profitable, Canadian dollar, Japanese yen. There's the equity curve. Not that great. It has been working in recent years, okay. We've got an average trade of 3.7 pips. So by the time we've added a few pips of costs and commissions, etc., this is going to be a money-losing strategy with an average trade value that small. The next one which makes money, which is making quite a decent amount of pips, is Euro Yen. The equity curve isn't that great, is it? What's the average trade value here? 6.9 pips, almost 7 pips. So again, that's going to be a little bit tight by the time we've paid some costs. Euro dollar. Got an average trade of only 3 pips, so this is unlikely to make money. Equity curve isn't that great. I mean, it is going up, but it's not that great. Pound, Japanese yen. Equity curve is going up. It's okay. I mean, it's pretty flat recent years. The average trade size is 5.6 pips. Again, that's going to be too tight. That's probably not going to make money by the time we've paid trading costs. Pound dollar, not a very good equity curve. USD Canadian dollar, not a very good equity curve either. Dollar Swiss franc, that's a better equity curve. Not a great start, but it is going up. Got an average trade value of almost 4 pips. Again, not big enough to overcome some trading costs. And this is the last portfolio we're going to look at, and we're looking at the 60-minute or the hourly time frame. So let's have a look at the performance report. This is the collective 14 pairs, 87,000 pips. So straight away looking much better than the other time frames. The equity curve looks nice. However, I do suspect that looking at the average trade value, look, again, this is the portfolio, but the average trade value is 1.7 pips. So by the time we've paid costs, this is a money-losing strategy over the whole portfolio. But let's look at the individual markets. And all of them but 2 are actually profitable. But let's see if we can find any which have got high enough average trade values. Australian dollar, US dollar was working really well and then essentially just gone flat. Canadian dollar, Japanese yen. It's a bit up and down, isn't it? What's the average trade value? Only 3 pips. Yeah, not high enough. Euro pound. Well, average trade value 0.09 pips, nowhere near high enough. Euro yen, average trade value of 4 pips, not really high enough either. Not a bad equity curve though. Euro dollar, equity curve was nice up until, where are we here? Probably 2018-19. And this is what can happen with strategies. Look at how nice this performed, and then it just completely stopped working for whatever reason. And this is one thing you have to be aware of when you're trading these strategies. You have to monitor the performance and decide when you're going to switch these off. Pound Canadian dollar, not a very good equity curve. Pound Japanese yen, it's making the most money out of all of these. Equity curve's nice. Average trade value 7.2 pips. Now we do have some wider spreads on pound Japanese yen, but depending on the time of day, we might just make a little bit of money by the time we've paid the spread and some costs. We're not going to have too many overnight costs because we're only going to be in these trades a maximum of 20 bars or 20 hours. So that's probably the best one we've seen so far. Pound dollar, average trade 0.15 pips, far too small. New Zealand dollar, Canadian dollar, similar average trade, far too small. New Zealand dollar, US dollar, average trade 2 pips, too small again. US dollar, Canadian dollar, average trade 0.77, too small. And last, US dollar, Japanese yen, average trade 3.17 pips. That's too small, really. Let's just have a look at the equity curve. Equity curve is nice, so the behaviour is quite stable. So the best one out of the 60-minute time frame is that pound yen. And this is why I'm not going to go any lower on the time frames. I'm not going to go down to the 30-minute or 10-minute or 5-minute, because as we go lower on the time frames, typically the average trade value does get smaller, and most of these are showing too small average trade anyway at the hourly time frame. Well, using the standard settings across all those markets and timeframes didn't produce anything particularly exciting, did it? There are some of those markets and timeframes which might benefit from adding some filters to the entries, or even adjusting or introducing some different exits. If I was to run optimizations across all of the tests, optimizations on the length of the Aroon indicator, that threshold of 30, the stop loss, or that timed exit, then there'd be thousands of iterations, and this video will just go on for hours and hours. As a general conclusion, I don't think this strategy is particularly great on the testing that I've done so far. And I've noticed that Oxford Capital Strategies, they only rate it as a C-rated strategy on the futures markets after doing the testing which they've done. I shall add the results to our strategy database and then get on with programming and testing the next strategy. For the next strategy, I might look for a B or an A-rated strategy from Oxford Capital. Well, I hope you've enjoyed this video. If you have, please give it a thumbs up and subscribe to the channel if you haven't already. Hopefully, I'll see you next week with another strategy. But until then, this is Jared Goodwin, and thank you.